Good day. Today the topic is how to prepare or deal with an upcoming recession or a market crash. Really interesting topic. Ton of news on this in the past couple of years. Excited to chat with you about it today. I'm Rob Tatro from robtatro.com, head of the Tatro Wealth Advisor Group here at Canaccord Genuity Wealth Management. Thanks for tuning in. Take a second, subscribe to our videos. We put a lot of content out. We'd love for you to tune in. So here's the thing. You watch BNN, you're watching CNBC, and they're talking about an upcoming recession. They're talking about an upcoming stock market crash, and you're panicked. You're worried about it. You don't know what to do. So first things first, let's remember that the market accurately prices in all reflective emotion of every single human being that's investing, every single institutional investor, and every single pension plan that exists out there. So the buying and the selling is a reflection of the current feels and the current emotions of the market. So there's a lot of people who tell you, I knew the crash was coming. I was 100% sure it was coming. Just be very careful out there, because in reality, you can turn on the TV every single day and you're going to see someone who's going to say the market is going to rally like crazy for the next 6 months. And you're also going to see 2 minutes later someone who's going to say the market is going to crash for the next 6 months. And reality is most of them do not know. They're clueless. They're doing their best they can to be a talking head on TV. But in reality, the key is to make sure that you have a portfolio that's built to absorb that. And how are you doing it? How are you taking some risk off the table if you feel that the crash is coming? Let's talk about your advisor first of all. So if you have an advisor, it's likely a discretionary portfolio manager. He or she should be in a position to have a plan in place for you. So if that individual, the advisor, feels that a crash or a correction is coming, hopefully he's taking the necessary steps to either reduce their risk, to reduce the capital that's exposed, or to maybe add some downside protection to your portfolio. Now, you never want to be completely out of the market, because in reality, most people are wrong. Most people, when they think a market crash is coming, they're wrong. So if you would have sold all these times and been out of the market for all of your portfolio, history will tell you that that would have been a colossal mistake. Markets historically make new highs and will continue to make new highs for the next 20, 50, 100 years. The key is to reduce the downside exposure. So if you believe a market crash is coming, and what we do at the Tatro Wealth Advisor Group is we'll take a look at your actual beta or your exposure to the markets. How much am I moving every time the market moves 1%? Every time the TSX moves 1% or the Dow moves 1%, how much is my portfolio moving? We like to target a high upside capture and a really low downside capture. So when assets are correcting, how much of that downside do we capture? And when markets are rallying, how much of that upside do we capture? So how do we do that? A couple different ways. One, you take a look at asset classes that perform regardless what happens in the market. So that specifically can be something like a private equity deal or a limited partnership or a real estate transaction that is uncorrelated to the markets, completely uncorrelated to the markets. Two, we take a look at maybe adding some private debt or something that generates a little bit more return but is not correlated to the markets as well. You also look to have some lower beta stocks, right? So maybe a utility stock, maybe an infrastructure play. Anything that's got a lower correlation to the actual stock market, you can maybe switch from a growth to a value play. So you want less companies that are super volatile, and you want more companies that are going to pay their dividends, strong balance sheets, maybe more large cap companies. Those are all strategies you could use if you think a stock market crash is coming. The other one you could use is to use a variation of either principal protected notes or equity income notes. These are structured notes that exist so that you can control your downside. You can say, I want this much exposure to the stock market, but I want only 10% of the downside or none of the downside or 20% of the downside. You can be really, really flexible. Now, if you're doing this on your own at home, you can't be flexible. But if you're working with a portfolio manager who's able to custom notes for you on a whim and on a day or two's notice, then you could actually protect the downside quite a bit. And that's the kind of stuff we do. So, we think the markets are high, for example. We don't. But let's say we did. Well, then we would take into account to build some principal protected notes or some equity income notes that would generate income, and that if the market crashes, the principal is protected. So those are some of the ideas in addition to the alternatives, in addition to the private debt, in addition to the lower beta equities. But I will say this, going completely to cash is likely not a good idea. You're probably going to be wrong when you think the market is happening. Then the market will rally. You're going to be so timid. You're going to be so worried about when to get back in that you're never going to get back in, and you're going to miss the party. And you're going to miss a year's worth of gains, which is too expensive to miss. So even if there is a crash, just remember this. 100% of the time in the history of the stock markets in Canada and the US, let's say 100% of the time when there's been a correction, the market has made a new high. So it's something to factor in. It's something to consider. You want to protect that downside, but you don't want to completely underexpose yourself and completely get out of the market. So factors to consider, really interesting stuff. If you want to hear more about how I do this, feel free to reach out to me. We'd love to chat with you about that. Take a second, please subscribe to our videos. I'd love to hear what your thoughts are about preparing for a recession. And please give us a like. I'm Rob Tatro from robtatro.com. Thanks for watching.